Assalamualaikum and hi everyone. Welcome to my channel. I am Yusna Liza Hamid. Today our topic is MFRS 3 Business Combination. For your information, MFRS 3 is equivalent to IFRS 3, IFRS 3 Business Combination as issued and amended by the International Accounting Standards Board IASB, including the effective and issuance dates. Therefore, the entities that comply with MFRS 3, that is the standard being used in Malaysia, will simultaneously be in compliance with IFRS 3. So let's start now looking at the MFRS 3. Before that, these are the references that are used or is being referred to as I'm preparing the slide. So for your information, MFRS 3 Business Combination, you should look at paragraph 1 to 67 to understand further of the standards itself. So this is the first page of MFRS 3 that I put here, right? Just the image of it. And you have all the defined terms or the definition in the Appendix A. So Appendix A is very important because it defines all the important terms within the context of business combination MFRS 3. And Appendix B is the application guidance. Please focus on Appendix B 5 to B18 only. And for your information, let me remind you that appendix itself is an integral part of the MFRS. And the textbook that is used for this course, I'm relating to the course here, which is FAR 320, Financial Accounting and Reporting. This is the introductory level, which introduced the business combination and consolidation to the students for the first time. So the textbook that is used here is the textbook by Jane Larza, edition, here is the 9th edition, 2018. And the title of the book is Company and Group Financial Reporting. And you are advised to study all example in these chapters that I mentioned that relates to FAR 320 in the context of the subject that I'm discussing. However, for those viewers, you can also learn through this video presentation the MFRS 3 business combination itself, because I'm also going to explain that within the context of MFRS 3 itself. So chapter 9 of the textbook, only 5 chapters from the textbook. Chapter 9 is the introduction to business combination and also consolidated financial statement. Chapter 10, we're going to look at how to prepare statement of financial position using the acquisition method. Chapter 11 will go and go further, looking at the part 2, which what happened if you acquire not only the shares but also the debentures. Chapter 12 is on the intra-group sale of asset. Chapter 13 is in preparing another consolidated statement of financial statement, another consolidated financial statement, which is the consolidated statement of profit or loss and other comprehensive income. So what we will do now is not to prepare that, but we'll go into the central or the MFRS 3 itself. So what is the objective of MFRS 3? This is to improve the relevance and reliability of the information, comparability of it that are reported in the financial statement about what? About a business combination and what are the effects. And to accomplish this, these MFRS, which is MFRS 3, has established the principles and requirements for how the acquirer in the business combination should have recognized and measure in their financial statement the identifiable asset. So that was being prescribed. How do we go about doing our business combination. Liabilities assume and any non-controlling interest in the acquiree. Remember, acquirer, the blue one here, is the one that is acquiring the control in the acquiree. And because of that, there is a business combination. In my previous slide, I discussed about two forms of business combination. And our discussion here is focusing on the case where you acquire a control. So recognize and measure the goodwill in the business combination. This is the objective of MFRS 3, where you will learn how to calculate goodwill as well and know the concept of goodwill as well as gain from a bargain purchase. You'll also be able to determine what are the information, and that was actually guided by MFRS 3, what are the information that need to be disclosed to make sure that the users will be able to evaluate the nature and effects of the business combination. So what is actually business combination? According to the MFRS 3 itself, it is about having a transaction or other event, and here our focus is where a reporting entity that is called the acquirer, they obtains control. So therefore, there should be a party that is called acquirer, and what happened, they obtains control of one or more. It can be one, it can be two, but as long as more than it is one or more businesses, it can also be one business. What is the business? The business that is being acquired is the acquiree. And therefore, if the two elements, hence there are two elements that are required for a transaction to be a business combination. And what are the two elements? Number one is that there should be an acquirer that obtains control of an acquiree. That is the one or the most important thing. And number two, what is being acquired is a business. It's not that the net asset is being acquired. That is the case of amalgamation and absorption. So the acquiree must be a business. So you are acquiring a business. So when you consider these transactions in a business combination, what you need to determine is that what are the assets and liabilities that you acquired that are assumed to constitute a business. Okay, next. Let's go to the next one. Next slide. What is the definition of business? Because we talk about the business itself. So the definition of business that I'm sharing here is the business definition of business as per the amendment to MFRS 3 in 2018. And the revised definition will apply to all acquisition of business made after 1st of January 2020. Before 1st of January 2020, there is a slightly different definition of business, and it has been revised, and I'm using the one that it has been revised. And what is the definition of business? So the business, right, as I mentioned to you just now, is a business that is being acquired. So that business is defined as an integrated set of activities. This is regarded as input that is capable of being conducted and managed. So the activities or a set of activities or asset that you acquired are actually being conducted and managed for the purpose of, and when you conduct and you manage, that is called process. For the purpose of, what is the purpose of the business? Business normally have purpose to provide goods or services. This is in the ordinary course of business, to the customers, or some business do not provide goods or services, but they are generating investment income such as dividends and interest, and also generate other income from ordinary activities, and these are considered as outputs. So for the purpose of output, we are looking at these three elements. And the previous definition as per Appendix B7 of MFRS 3 applies to all acquisition made before January 2020. So I'm making use of the revised definition that applies to all acquisition of business made after 1st of January 2020. So these are the elements of business. If you know the definition of business, these are the elements, where it has three elements in the acquisition of business. Number one, as I mentioned to you, inputs just now, where inputs are the economic resources that create outputs when one or more processes are being applied. These are definition as per Appendix B7A of the MFRS 3. The process, what is a process? MFRS 3 Appendix B7B defined that as system, standard, protocol, convention, rule that when you apply it to an input or maybe more than one inputs, it will create output. Either that is the process of having strategic management, some kind of operational process, or maybe resource management process. And that will give result to the output. What is output? That was the result of inputs that are being processed. Right? When inputs are being processed, they are going to produce an outputs. That was the definition that you have here, is the definition as per Appendix B7C. So based on the revised definition in MFRS 3, these are some examples of input. What are input? Non-current asset, which are including intangible asset or non-current asset, where or maybe some intellectual property, where it has ability to obtain access to the necessary materials, or that one, the ability to obtain access to necessary materials or rights of an employee. This is under Appendix B7A. And strategic management process, these are, as I mentioned earlier, under Appendix B7B. Regarding output, these are some explanation of output about revenue that you generate from the sale of goods and services. So this is maybe relating to the one under MFRS 3, because MFRS 3 here you can also read together with MFRS 15 on revenue. So should be present. So whatever revenue that you generate as a result of applying MFRS 15, revenue from contract with customer, and also providing return. These are all outputs of a business. Either you generate revenue, you generate revenue in form of goods or services, or sometimes it is the income from the investment in the form of dividend and interest. For details, you can refer to Appendix B7 to B12 MFRS 3. So this is the scope of business combination that we are focusing. We are focusing on a business combination that relates to acquisition of control. And because there is a control, that will result in a parent-subsidiary relationship. This will be explored later, and we'll be going through what is the definition of parent and subsidiary itself. But at the moment, the acquirer is to be regarded as the parent, and we will assume that the acquiree is the subsidiary, because the acquirer is the one that will acquire control. The acquiree is the one that is going to be acquired, and as a result of the control, it will give rise to a parent-subsidiary relationship. And these two entities, however, which is the subsidiary as well as the parent, they remain separate legal entities. But to the point of view of accounting that form a group. MFRS 3, which is on business combination, the one that we are talking now, is applicable to the consolidated financial statement that the parent prepares for group. So it is applicable to the consolidated financial statement that a parent prepares for a group. So when there is a parent that prepares financial statement for a group, it is because the acquirer, which is the parent, has acquired control. As a result of acquiring control, they need to prepare, or the parent need to prepare, the combined result called the consolidated financial statement. So MFRS 3, however, does not apply to the following. It does not apply to the following: joint venture, acquisition of an asset or group of assets, like the case of amalgamation and absorption, and also a combination of entities or business under common control.